In less than a week, Adobe is down by 15%. In this video, we're going to analyze and see if this is a stock that we should invest in or something we should skip. And at the end, I'm going to tell you guys why it's actually plummeting and what caused the initial plummet to happen at the start of the year. And just a spoiler alert, it is not forward guidance. This stock has been decreasing in value for more than a year now. It has incredible consistent revenue. It was making over $10 billion 5 years ago to today making $20 billion. That's a 2x increase over 5 years. What is also nice to see is that revenue was consistently going up. It didn't have an immediate spike like Nvidia does recently, but a very consistent flow that makes its revenue more predictable to project for the next 5 years. It's also able to decrease its number of outstanding shares by 2.5% every year for the last 5 years. It has reduced its outstanding number of shares by 10%. I don't see this chart changing for the next 5 years. Now, I do have to mention this kind of practice is very common when a company starts to have slow growth, and Adobe seems to be entering that spot. As you can see from this chart, it used to be growing above 20% to now growing in the 10 or even single digits in the latest quarters. But in my opinion, this is actually a positive. If they can time the share buyback right, they can return more value to the shareholder by buying more stock when it becomes undervalued, and this can more than make up for the decline in growth. But I do have to mention one last thing. It is still growing, which is always a positive when it comes to my opinion. I hate to see company that has plateaued like AT&T, Apple, and many of those other companies that have just flatlined their revenues. Adobe in the last 12 months has made a net profit of 12%, which is significantly less than what it was making before the pandemic. And I'm going to show you what the main reason behind that is right now. Now, if you take a look, Adobe had a 30% margin of profit in 2021 and even a little bit of 2022. But when do you start seeing a significant decline? Yes, you start seeing it towards the end of 2022 and the beginning of 2023. And this has to do with their extraordinary AI spending on their Firefly products and services. Now, in my opinion, this will be a one-time expense. 2-3 years from now, I expect Adobe to be back at 30% margin of profit. This teen-digit profit will significantly increase. Now that we have taken a look at the numbers, let's go to the Excel sheet and make some predictions and see what the price of this stock will be by 2030. First projection we need to make is on the growth side. How much do we expect Adobe to grow in the next 5 years? 3 years, and on average of 11% growth rate. When you compound that 11% growth rate for the next 5 years, that makes its growth 75% in the next 5 years. So that is the metric I end up going with. I personally think Adobe is going to grow by 100%. It's going to 2x its current revenue, but just to give it a margin of safety, we'll say 75% like the analysts are projecting. Next, I feel like it's going to easily able to decrease its number of outstanding shares by 10%. It's already done it for the last 5 years. I don't see how that can be repeated for the next 5 years. PE is going to come down dramatically. Right now, its current PE is at 38, which is bonkers. I think it's going to come down to 32. I already hinted at this, but I think its margin of profit is going to go to 30%. Like I said, this AI spending is going to be short term. After that, they won't really have any major expense. So if we put all the numbers in, all the information in, we get an intrinsic value in the next 5 years of $875 by 2030. Now, this is significantly, now for us to get a 2x return, we have to buy this stock at 236. In my opinion, we're not that off. I think at 450 will be a time to start dollar cost averaging. That's when I'm going to enter the position. But even if we were to buy this stock today, we would still do better than the S&P 500. This would give us a 1.89% return, and we would do 34% better than the S&P 500. Same amount of money that we used to purchase the stock, we would only get a $690 in return in the next 5 years, versus if we were investing in Adobe, which would give us $872. Now, it's very important to keep an eye on our investment, what we should expect every quarter and every year. For Adobe, we should expect $3.1 billion of growth in overall revenue every year and a $780 million every quarter. That means by Q1 of 2024, we should expect Adobe to have $21 billion in revenue, almost. And by the end of 2025, it should be 24 billion. We will constantly keep looking at this and making sure that Adobe and people that don't keep an eye on this metric, usually out of fear, will sell a stock too early or keep a stock in hand for a little too long when the fundamentals are failing. Planning out the company's fundamental roadway helps you stay confident even when there are price fluctuations on the stock. Now that the analysis is over, let's talk about why Adobe is actually dropping in price. And it has nothing to do with forward guidance, but everything to do with OpenAI's text to video model called Sora. Literally, you type in a text prompt and it will create a video according to your text prompt. For example, if I type in make a flying car on the surface of Mars, it will literally generate a video showing me a flying car on the surface of Mars. 9 months ago, OpenAI introduced a demo video of what this software can do. Look at it right there. 9 months ago, they introduced it. And right after they introduced what this software can do, Adobe had an immediate plunge from 634 to all the way to 440. When Adobe itself released its AI model called Firefly, the stock immediately jumped back 580. And then in present day, what's causing the modern day plunge is the fact that they have no way to monetize this software yet. They're actually letting their users use this software for free. This is for two reasons. Number one, they want the subscribers they have through their Creative Cloud to get used to their tool instead of trying OpenAI Sora. Number two, there is a limit. So when they try to generate more than 1 minute of video, they will have to pay for the software, which will become a revenue generating stream in the future. And majority of that revenue will come from the enterprise companies. For example, Disney, Pixar, Warner Brothers, Paramount, that want to generate these full-length movies are going to pay Adobe millions to have these movies generated, instead of now where they have to pay billions of dollars to artists to animate this stuff. Anyways, guys, I hope you like this video. Please like, follow, and subscribe. And if you're interested in some exclusive content and stocks that I don't review on YouTube, you can always check out my Patreon. There, I do about 3 to 4 stocks a week. Here, I do about 1 to 2. There, I just put it up raw, and you get the full detailed analysis and all the good stuff.